Hi everyone, welcome back. This class I will be talking about the single candlestick method. So you can see that this is a spinning top. This is named spinning tops. The spinning tops have a small body and the longer shadow. So Japanese candlestick with a long upper shadow, long lower shadow, and a small real bodies are called the spinning tops. And the color of the real body is not very important. The pattern indicates the indecision between the buyers and sellers, which I mentioned last class that the small body indicates the indecision, and also maybe the same quantity of the buyers and the sellers. And this is not too volatile, and the body would be small, and the upper and the lower shadows almost the same length. So what is the characteristic of the spinning top? The small real body shows little movement from open to close, and the shadows indicates that both buyers and sellers were fighting, but nobody could gain the upper hand. So that means no one win. So even though the session opened and closed with little change, prices moved significantly higher and lower in meantime. Neither buyers or sellers could gain the upper hand, and the result was a standoff. If a spinning top forms during uptrend, this would usually means that there aren't many buyers left, and possible reversal in a direction would occur. So the spinning top in an uptrend, which means that not much buyer. And in a downtrend, maybe there was means a different way. So you have to see that the spinning tops during a downtrend, this usually means there aren't many sellers left. So this is the story behind the candlestick. So when you see the spinning top, you will see that if in an uptrend, you will know that the buyers are left over a little bit. So if in a downtrend, you see a spinning top, this usually means that there aren't many sellers left. So if there aren't many sellers left, that means we better don't continue sell. This would be high risk. So next I'll talk about dojis. Dojis, neither buyers or sellers were able to gain control, and the result was essentially a draw. There are 4 special types of dojis. The length of upper and the lower shadows can vary, and the resulting Forex candlestick looks like a cross, inverted cross. The word doji refers to both the singular and the plural form. So when a doji forms in a chart, pay special attention to it, because the doji form a series of candlesticks with a long hollow body. The doji signals that the buyers are becoming exhausted. So this is actually the reversal pattern. This is what we call a doji. The doji is this one, a cross. So the long black candle, when you suddenly see a doji here, that means indecision, a decline, and maybe there is a reversal. So this is a reversal candlestick pattern. This will show you that when you see a doji, there may be a reversal. If you are thinking of to continue sell, if you see a doji, you may stop and think about it. So this is a long white doji. So this is the long white candle plus a doji. So if you planning to buy and you see a doji here, this is very risky. Maybe a reversal want to take place. So this is a single candlestick pattern, the long leg doji, the dragonfly doji, a gravestone doji, a fall price doji. So these are all the doji. Even this is the doji, just that they have the different name. The doji have the same open and the close price. That means no body. The open is here, close is also here. So you can't even see the body of the candle. So at least their body is extremely short. A doji should have a very small body that appears as a thin line. The doji candles suggest indecision or struggle between the buyers and the sellers. So when you have this situation, you can't continue buy or you can't continue sell if in a uptrend or downtrend. So this is a single candlestick pattern. Hammer, hanging man, inverted hammer, shooting star. You need to learn and able to read the pattern. Like this one, the shadows is quite long and at least the 2 or 3 times of the body. This is called a hammer. This normally happen in the downtrend. So we're going down and you have see a hammer. This is called a hammer. But the same thing, this is on the uptrend. We will call it hanging man, and the color is different. Inverted hammer, which means that the shadow is upper Just like the hammer, you inverted it, and this is the upper shadows and this is the lower with no shadows. But in the uptrend, when you see some sort like this is not called the inverted hammer, this is called the shooting star. So you need to memorize the name and be able to know when this happened in your chart, and so you will know what to do with it. So what is hammer? Hammer is a bullish reversal pattern that forms during a downtrend. It is named because the market is hammering out the bottom. When the price is falling, the hammer signals that the bottom is near and the price will start rising again. So the long lower shadow indicates that the seller pushed the prices lower, but the buyers were able to overcome this selling pressure and close near the open. Just because you see a hammer form in the downtrend doesn't mean you automatically place a buy order. You can't do that. More bullish confirmation is needed before it's safe to pull the trigger. And typical example of confirmation would be to wait for the white candlestick to close above open for the right side. So after you see a hammer, it's better you see the right candle. This is the right candle. After you see the candle, and the next right candle you can see the white, then maybe you can thinking of to do a buy here. So the recognition criteria is the long shadow is about 2 to 3 times of the real body, little or no upper shadows, the real body is at the upper end of the trading range, and the color of the real body is not important, whether it is a black color or the hollow, it is not important, but the shape is very important. So what is hanging man? Hanging man is a bearish reversal pattern that can mark as a top. This is normally happen in the uptrend, which I showed you just now. And the long lower shadow that sellers push the price lower during the session, buyers able to push the price back up. This should set up alarm since it tells us that there are no more buyers to the left to provide the necessary momentum. So if in an uptrend you are planning to buy and you see the hanging man, this would signal us the reversal pattern. So to recognition, a long lower shadow which is about 2 to 3 times of the real body, little or no upper shadow, the real body is upper. Actually this is the same as the hammer, but just that this is happened in the uptrend. So inverted hammer and a shooting star. So these two, the color is not important, the body and the shape is very important. Inverted hammers occurs when the price has been falling, suggesting the possibility of the reversal. So this is the reversal pattern. Doji, spinning top hammer, inverted hammer, shooting star. These are all the reversal pattern. Possibility of the reversal when you see it in the uptrend or the downtrend. And the inverted hammer, this is the shape, just the inverted. Shooting star is a bearish reversal pattern that looks identical to the inverted hammer but occurs when the price has been rising. Its shape indicates that the price opened as a low, rallied but pulled back to the bottom. So the last single candlestick pattern I will show is the Maruboju. Maruboju is this one, no shadows or very little shadow. This is a white Maruboju, this is a black Maruboju. So a white Maruboju contains a long white body with no shadows, the open price equal to the low price and the close price equal to the high price. So this forms the Maruboju. So if you can see the Maruboju appear in your chart, this is very bullish candle as it shows that the buyers were in control the entire session. So it is usually becomes the first part of the bullish continuation or the bullish reversal pattern. So this means that buyers is in control when you see the white Maruboju. And when you see the black Maruboju, this is the sellers in control. So a black Maruboju contains a long black body with no shadows. The open equals the high and the close equal the low. So this is a very bearish candles as it shows that the sellers in control. The same thing. So finish, and next class I will talk about dual candlestick pattern. So I have done the single candlestick pattern. So see you in next class.